What's going on, Wolfpack Nation? It's the Wolf. It's Wednesday, around 9 o'clock at night, market time. Long day, about 13 hours at the desk. And we figured, why not just top this epic day with a video? A little recap on historical liquidity analysis. We're seeing a shift in the market, basically high in-house participation on these institutional high frequency trading market makers. Not really sure what they are, doesn't matter. Just huge influx of in-house liquidity relative to outside participation, aka retail. So let's just take a look at the volume profile structure. Here we have ATOS. So ATOS, these were the lines that we had before today's bell. And looking up here, you can see that today traded around 44 million shares. Now, the amount of volume it traded today really isn't super relevant unless I have something to weigh it against. So if we look at the 10-day average volume at 3.9 million, now that gives me a ratio. Now I can look at historical average volume versus today's volume, and that gives me an aggro X of about 1100%. So basically, today's volume on ASTS was roughly 11 average sessions. So with that gives me a little bit of perspective. Now I can take that information and look at the shift into the volume profile structure. So again, the volume profile structure is it's a living, breathing entity. It only collects volume. But here's where the lines where we had on today. We did trade it. Let's go ahead and take a look intraday. Let me just zoom this up. You can see that we caught a bid here. And we did, as mentioned, we did trade it, and we ended up taking profit, I think, around these areas here. Let me just pull it up. Here's executions on this ticker. So, again, we're trading these lines. Basically, at Wolf Trading, we use HTF, historical liquidity deposits, to predict areas of potential future support and resistance. Again, potential support and resistance via leading information to confirm or deny the thesis. Basically, we watch tape plus or minus 10, 15 cents, no more than 1% of the asset price at these levels, and we're able to formulate a thesis. And if the thesis is a confirmation on the trade, we take it. If it denies the thesis, we cut. And an example, here's an example, CUEN this morning. Here's an example where the trade thesis was it was denied. It was early in the morning. It was pre-market, not early in the morning, but we cut the trade. We came back in and we took this trade off of the intraday point of control at 820. You can see here, entry thesis on 7/7's aggression, soft supply right here. So we wanted to see some aggression right here through the sheep line into 8.2. We wanted to put 15% risk right here. We caught it. And the risk thesis was fairly tight on an 826, 832 sustained bid, meaning if the bid can hold right there and it's a little soaky, and then the bid steps up again from 25 to 26, regardless of the spread, I'm just going to hit the offer. I'm going to lift the offer, and I'm going to deny the thesis. But that was not the case. This trade did work out pretty well. This CUEN. Let's take a look at CUEN. This was quite the kill candle, if I remember correctly. I'm not exactly sure what the float was, but let's look at the M1 chart. Again, look at this. This is just pure manipulation in our opinion. So I'm not again sure what the float was, but this 6.6 million M1 kill candle basically demoralized the float. I mean, that was just a straight larger player risk off event, and you can see. Won't go into that, but basically we're just trying to show that we use historical liquidity to try to track these players, and we're starting to see some success. We're getting 1% better every single day, and I'm just gonna show you guys what we're looking at on these tickers. So let's go back to the main screen. Here's CUEN, and I'll just roll through a couple charts, show you how I'm marking historical liquidity. Again, we use the 3-year 1-day chart, and this is our go-to. We're very systematic in the way we approach historical liquidity. We have basically 4 different time frames that we use. We use the HTF chart, which is the 3-year 1-day. Then we also have short-term liquidity events. This is from the day 1 liquidity event to the current day. Like IHT was a multi-day runner. OCGN was a multi-day runner. I think that had fundamental pressure from HC or fundamental motive. But ALF, multi-day runner. CERE day 2. We're seeing a lot of day 2, day 3 legs. So, we have to pivot on the time frame. Then we also use the multi-day time frame, which is a 2-session view, and then intraday, which is today's session. But so here we go. This is monster volume, right? So you can see on CUEN again how much volume did it trade? It traded 210 million shares. Okay, that's a lot, but I mean, really, without multiple data points, you just have a single number. And we always want to use ratios and compare ratios at specific points in time to another point in time. Like maybe there's aggression towards the bid. Well, what's the relative ratio, there versus the next time maybe these algos are getting aggressive versus the demand zones. And then we can compare an aggression ratio. Let's give you guys an example. So maybe we can compare an aggression ratio here to here and here. And that would be leading data in our opinion, right? These are events. Normally when these algos or high frequency trading firms or whatever they are, who can, I'm not really it doesn't matter. There's an influx of liquidity in the market, and when that liquidity is aggressive versus outside participation, they basically come out of they come out from the camouflage. When they're trying to feed and when they want to extract wealth from the market, they're not really so concerned on being camouflaged anymore. And when they come out and they feed, we see a more honest tape. We see integrity in the prints, and we're using this information in real time. At Wolf Trading, we believe that there's edge in the analysis of real-time data. And that's what we do. We don't trade moving averages. I have VWAP on screen. That's the only indicator I have besides the volume profile. And basically, the only reason why I have the sheep line on screen is because I want to see how these larger participants treat the influx of liquidity. We also track large traders who have a following, or maybe traders that run larger rooms. When they alert a buy signal, whether it's Twitter, a Discord room, a website, whatever, when there's a large influx of liquidity that hits the market, we're not so much interested in that call or what they're doing. We're interested in how the larger participants treat that liquidity. And that's, in our opinion, that's where the edge is. So that's just a little taste of what we do. And we're fanatics about leading data. This is basically how we look at the markets. And it's not the most common thesis of how to track and how to trade, but we want to get our information as soon as possible. And the real-time data analysis, in our opinion, using leading information such as level 2 time and sales, liquidity heat maps, real-time data analysis is the edge. We like to get our milk straight from the teat. I guess that's really what it is. So let's just go ahead and take a look here. So CUEN, again, monster liquidity here. So we're going to mark these lines as HTF DPs, higher time frame decision points. These are areas where we believe that there's going to be a battle, a large enough battle to where the winner of this battle will, let me just move this. So let's say if this thing pushes back up to like 925 and we get short here, if there's shares, if we get short 920s, we can theoretically take this trade on 12 cents of risk. And if the trade does work, if the thesis is confirmed, we believe that buyers will be exhausted here. And same on the bottom of this low a day print. The low a day here is 580. So if we get long at 580, regardless of how we feel or what we think the market's going to do, if we want to, we want to put ourselves in positions over and over and over again where we can generate 4, 6, 8, 10, 12 to 1 risk to reward ratios. That's really all it is. Regardless of feeling, regardless of what you think the market's going to do, just over 1,000 trades. Let's just put ourselves into the position where we can have a 4 or higher, a 4+to 1 risk to reward ratio. And then really, trader longevity stems from the ability to confirm or deny a thesis in 10 to 15 cents. Really, if I can take a long here in 5/8, whether I'm right or not, if I can confirm that thesis is accurate or deny it, better yet, if I can deny this thesis on high percentage of success, 70, 80% success rate in 10 cents, then I'm going to be, I have an opportunity to have a long career. We don't take too many longs. We're starting to take some long trades. Here's a trade that we took today on AMC. Again, using short-term liquidity analysis here, we called the bounce opportunity at 9:39 in the morning in the Wolf Trading Discord room, and we wanted to get long here, risking, a sustained 54.50 ask. So if there's pressure on the ask at 50, that was going to be our denial, our thesis denial. And we were a little bit early, but we watched it. We knew we were a little bit early, so we scalped out 50%, and then we price improved. We recycled that back down, reducing our cost basis, and then we got flat on this push. But that's an example of, I missed the trade, but if the trade goes south, we want to be able to deny the thesis as soon as possible. Another trade, CERE. We were short calls on this one overnight. We were short. I think the chain yesterday only went to 30, so we were short 35. We were short 25 calls on defined risk. 30. Yeah, we were short 25 calls, defined risk, long 30. We're here on CERE. We're just trading lines as well. Let's pull that up. CERE. So here you can see these are the lines that we used today. I haven't touched these lines. Let's just zoom in. So these lines right here are high volume nodes. These are HVNs. These are areas where price is magnetic. So we traded these lines here. 3109 was yesterday's liquidity event high a day. So that's a higher time frame decision point. These are areas that we're looking at. This is a soft supply right here at just a little bit over 28. We were looking at getting short here. Right in this area, we had eyes on tape here. And these are the areas where we were going to try to generate a thesis, right? Well, the thesis was we wanted some aggression versus 27.9s up here. We wanted some aggression up here. And then we were going to try to throw some feelers on just above 28 at 28.04 right here and 28.08 right in here. We were going to try to get some risk on. Again, tight risk. We want to be able to confirm or deny this thesis on 10 to 15 cents of risk. If we can deny, even if the trade is wrong, as long as we deny it on tight risk, right? If the risk is tight, we live forever. If the risk is tight, we live forever. That's a saying that we have. What else did we trade today? ASTS, AMC, CUEN, CERE. Oh, BLIN. BLIN was very tricky. This was a tricky trader. We got in just above 6, and the trade was super strong. We ended up taking that off about close to at the money. Small red on that. Added some back, and then we got a little bit more size up here in around 6/7s, and then we just started unwinding. We reduced it to about 90% off. We just had a lotto out, and then there was a soak here and recovery push right into an ask release. Basically, the larger participants They just basically lifted off the static liquidity off the ask, and then they probably as well, again, this is just my opinion, but they also initiated the aggression towards the organic liquidity on the ask, and then that's where we see the volume to range ratio acceleration here. And I added some back pre-halt, just before the halt. I don't know exactly where I got filled, just right where it was, right before the halt, and then halt resumption. It was a LU, a level up halt, LU LD volatility halt, and then I added some at high a day, which was also pre-market highs, and then they just lifted it again, straight halt, level up, halt resumption, gap up into straight up into a second back-to-back level up halt, and I exited the position before the halt resumption. Or I mean, before the halt, I just got out, and luckily I had 5 minutes to kind of collect my composure, and came back. And I was hesitant to even get back into the trade, but I did see some pressure. I did see some sustained pressure above 8, and I started building a position 814, 818. And again, all of these trades we lay all the executions out, not in real time, but before we enter. Majority of all of the trades that we take, except for stops or limit orders, we like to trade using passive liquidity. So we alert, and we post our trade thesis in real time, and we alert all of the shifts in the thesis again in the room. And again, just trying to get some profit here on this high a day push into the halt. We forfeited 75% of the morning's profits, and we were risking 50%. So we were using like a wallet pattern risk, where we were risking 50% of morning's gains on this recycle versus high a day, and we just got caught. We got caught in this move here, and we gave back more than we wanted, giving back about 75%. But we got composure and got back in, and we caught the fade down to 515. So 515 was a nice fill. Here's some alerts that we had on it. 515 was what we were looking for. We were talking about 515, from 10 o'clock in the morning. This was the area that we were looking at, and this is just some commentary from the room. But yeah, so it was a tricky day today. We were green on most of the trades today. Here's a look at that CUEN trade. Again, the thesis was already laid out prior, but we like to try to trade alongside the larger players, and we're not of the scalper mindset. Our mentality is to position play assets alongside the larger participants. We're basically like a pilot fish. Like the little fish that swims with the whales and the sharks, and that they just feed when the larger entities feed, and that's kind of our style. And we're starting to get our fingers on the pulse. We believe our fingers on the pulse of these larger participants, and these algos are scam artists. I mean, they're basically out there to induce human emotion. And they're just counterflow traders. Every consolidation I look at now with skepticism, thinking, the larger players are just trying to create a liquidity imbalance. And if they can create a liquidity imbalance, enough that's incentivized for them to counterflow trade it. Maybe if they can get 70% of, a mid consolidation, 70% of that outside participation is uptick, then they're just going to pull. Vice versa. Maybe they can get 80% downtick shorts. Maybe they can get an influx of supply in a specific consolidation. Then they're incentivized to go higher. Not only are they incentivized to counterflow that consolidation liquidity, but then maybe in the morning they soak 25, 33% of the float on a 10 million float asset. If the trading vehicle is a 10 million float, and this algo might have 2.5 or 3.3 million shares just soaked, and maybe it's not really trying to dump it until the midday. As such here, let me see. CUEN. Here's an example of that right here. So this candle right here was 6.6 million. That's just a kill candle risk off. So we believe, again, this is just a lot of opinion, but just wanted to talk a little bit about today's action. Hopefully this helped for a couple of you guys. Again, marking some lines. Let's take a quick look here. So this is a lower consolidation. You have the upper LVN, the lower LVN, and then the high volume node, the HVN here. We like to mark our HVNs directly in the middle. Again, high volume nodes are more magnetic in nature, not so much resistant as an upper LVN would be the ceiling of the consolidation, and the lower LVN may act as the floor. It may continue to act as a floor because it already has, right? So when we look, let's pull up a different chart. Let's pull up ALF. ALF is multi-day runner as well. So here's an example. Again, these are old lines, but historically speaking, this consolidation here, these levels, we can predict that these levels may act as support and resistance because they have prior. Let me just pull a slide. Like ALF here. So why would we think that this area here would act as support? Because historically speaking, it's been tested. It's been tested over and over and over and over. And really, it doesn't matter the length, in my opinion. It doesn't matter the length of the time in days. Basically, as you can see, we don't use candles that much. We believe that the integrity of the chart is in the liquidity, is in the volume. So again, it doesn't really matter the time, but on this volume, I can tell the way that the structure is created that this was a high volume test. And in our opinion, when you look at the daily chart, we don't believe in candle equality. So say if you're looking at a chart, every candle is not created equal. When you look at the bottom of the page, every single day does not have the exact same amount of volume. So if every single day does not have the exact same amount of volume, how can you lackadaisically just place resistance here when there's so much more detail and depth inside that? And again, this is just our opinion, but these are the lines we trade. This is our style of trading. We're starting to really get in a rhythm, trading trading manipulated assets. A lot of assets in the market are manipulated. We're seeing higher and higher influx of manipulation in the markets. I mean, if you look, I don't know, I'm not sure how long you've been trading, but if you look over the last 18 months, the market, the number one variable that we've noticed, in our opinion, is the influx of liquidity. That's the most defined change in the market, has just been the amount of liquidity we've seen. I mean, we've seen assets trade 1 billion shares. I mean, Hertz traded 1 billion shares 6 months ago before they delisted. I mean, we're seeing billions of shares traded, hundreds and hundreds of million. Today, we just saw 350 million share ticker. That was not occurring. I don't remember any of those occurrences 2 or 3 years ago, 2018 when I started trading. So, if you're not, in our opinion, if you're not tracking liquidity, you might, you're going to get left behind. That's a bold statement, but we really believe that. Track the liquidity, stay in front, stay ahead, and take those moving averages off the screen. Take the VWAP off the screen unless you're using it, appropriately. Again, this is just our opinion. Our strategies and our strategies are no better than any others. We just wanted to share some insight on how we've been trading, and hopefully everyone's staying safe out there. It really is a difficult time. It's a hostile environment right now.